Yet again, another IPO hits the market, this one being Unimech Aerospace and Manufacturing Limited. In this video, we will discuss all that you need to know before applying or rejecting this IPO. So let's get started with the business overview. Unimech Aerospace, established in 2016 and is headquartered in Bengaluru, specializes in manufacturing critical components for various industries, including aerospace, defense, energy, and semiconductors. The company focuses on producing complex tools and systems such as mechanical assemblies and electromechanical systems tailored to client specifications. With 2 ISO-certified manufacturing facilities covering over 120,000 square feet, Unimech is well equipped to handle high-precision engineering tasks. Their capabilities include build-to-print, manufacturing products based on designs provided by clients. Then there is build to specification, collaborating with clients to design products that meet specific requirements. This dual approach allows Unimech to serve a diverse clientele while maintaining flexibility in production. Unimech has established a strong global presence, exporting approximately 90% of its product to key markets like the USA, Germany, and the UK. This international reach not only enhances their revenue streams but also solidifies their reputation in the global market. Another point to highlight is that a major chunk of revenue comes from the aerospace sector, mainly from manufacturing aero engine tooling and airframe tooling. Over the past 3 years, more than 94% of the revenue has been from this sector. This shows the company is heavily dependent on the aerospace industry. Now moving on to some IPO details. Unimech Aerospace is all set to launch its initial public offering, opening today from December 23, 2024 and closing on December 26th. The company has set its price band between 745 to 785 per share, with a minimum lot size of 19 shares. So for a retail investor, the minimum investment will be 14,915. Unimech Aerospace aims to raise up to 500 crores through this IPO, with 250 crore coming from fresh equity issue and another 250 crore coming from an offer for sale. Unimech Aerospace promoters, including Anil Kumar P and others, hold 91.83% pre-IPO. The stake will reduce post-issue to 80%. Now, what are the objectives of the issue? The primary reasons of the IPO are to raise funds towards funding capital expenditure for expansion through purchase of machineries and equipment. Second is to fund the working capital requirements of the company. Third is to invest in its material subsidiary, and lastly, for general corporate purposes. Now, what about market opportunity? The aerospace and defense industries are critical sectors focused on the design, production, and maintenance of aircraft and defense systems. These industries rely on precision tooling to manufacture high-performance components such as machining parts, coatings, fastening solutions, giving a sweet spot to Unimech. And now, as the aviation industry continues to expand, driven by increasing air travel demand and fleet modernization initiatives, the aircraft maintenance, repair and overhaul (MRO) as well as the GST ground support tech tooling equipment market are expected to experience significant growth and evolution in tandem. In fact, total global air travel spending reached $876 billion in 2019 and is expected to reach $1 trillion by 2024. This growth boosts the demand for aircraft MRO services, including repairs, maintenance checks, and component replacements. Now let's look at the financial performance. When we look at the revenue from fiscal year 22 to fiscal year 24, Unimech reported a compounded annual growth rate of around 140% in revenue. The company maintains superior gross margins of around the 70% mark, which basically means that more than 70% of business revenue is left over after the subtraction of direct costs such as labor and raw materials. The EBITDA margin also expanded from 21.3% in fiscal year 22 to an impressive 40% in the first half of fiscal year 25, indicating they're efficient in managing their costs. Now, when we look at the bottom line of profitability, Unimech experienced a CAGR growth of 313%, recording 58 crores in profit. In the first half ended September, the company has already witnessed 38.6 crores in profit. Moreover, the company maintained superior profit margins of 32% in its latest reading. Lastly, when we look at the return ratios, they also have increased significantly. Both return on capital and return on capital employed have expanded over the years, reaching above the 50% mark in fiscal year 24. Moving on, let's do a quick analysis of key players. The image on the screen shows the presence of competitors in key industries. If you look closely, Unimech has a portfolio that caters to the widest breadth of product coverage from A&D, energy, oil and gas, GST, semiconductor, as well as PMC. Now, if we compare all these players in terms of financial performance, Unimech does stand out. Despite being a mid-sized company compared to other players in terms of revenue, Unimech is the fastest growing company, having recorded the highest revenue growth with a CAGR of 139.7% between fiscal year 22 to 24, and has achieved one of the highest EBITDA and PAT margins in fiscal year 24. Moreover, Unimech has recorded the highest ROCE and ROE in FY24 among the peers. If you look at the valuation, based on an upper price band of 785 rupees per share, Unimech demands a price to earnings ratio of 59.3 times based on FY24 and a price to earnings ratio of 92 times, which is comparatively much lower than its peers. Now let's head to our last section, which is strength and weaknesses. Let's start with the strengths first. Unimech's state-of-the-art facilities enable them to produce high-precision components efficiently. Moreover, they offer a unique capability of build-to-print and build-to-specification to the customers. With nearly 3,000 SKUs in the tooling and precision complex sub-assemblies category and 760 SKUs in the precision machined parts category, they cater to a broad customer base across various sectors. Their export orientation allows them to tap into international markets, effectively supplying more than 26 customers across 7 countries. Lastly, Unimech has built strong partnership with key players in the aerospace and defense sectors, ensuring stable revenue streams. Their clients include top global airframe and aero engine OEMs and their approved licensees. Additionally, Unimech manufactures complex tooling, mechanical assemblies, electromechanical turnkey systems, and precision components. Given the complex production process and lengthy approval process from clients, it is difficult for a new entrant to set up facilities for manufacturing of products. Now, what about the weaknesses? While international sales boost revenues, this reliance makes Unimech vulnerable to global market fluctuations and geopolitical tensions. Unimech generates more than 90% of its revenue from exports. Now, the company is dependent on the top 5 customers who contributed 95% to its total revenue from operations in the first half of the fiscal year. Loss of any of these customers or a significant reduction in purchases by any of them could adversely affect its business. Also, Unimech's business model is such where there is a lengthy order to cash cycle. There is a considerable time gap of 7 to 28 weeks between the receipt of order and the payment, thereby affecting their working capital requirements. Lastly, demand for aerospace products can be sensitive to economic cycles. Downturns may affect sales significantly. Now that you have a comprehensive understanding of Unimech Aerospace, you are equipped to make an informed investment decision. Whether you're considering investing or just curious about this innovative company, Unimech's journey is one worth watching. Now, having said that, this is me, Ralston, signing off. Have a great day and stay safe.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.